Dow Jones Industrials, folks, down 512 points at the low of the session, down about 698 points. NASDAQ was down 148. It's still down 96. We're coming up slightly off the floor, but it is still very deep red at the moment. All right. I want to get right now to what is actually going on when we're discussing specifically safe havens. Where are they besides the Treasury that we are seeing at the moment? What about things like Bitcoin, which were born out of the last recession and the last problem, because people thought, oh, let me go to this peer-to-peer thing and leave the banks out of the picture. Tom Lee is with us. He's the managing partner at Fundstrat Global Advisors. Tom Lee, give me your thought on Bitcoin. People think it's a little strange that we're actually talking about it right now. It's down $315. Why are you talking about it?
Well, I think people are watching Bitcoin because this is one of the moments to see how a crypto asset performs. Yesterday, and really in the past week, correlations between bonds and stocks converged, and Bitcoin should be a safe haven. It's down 300 and a couple percentage points, but in the realm of relative value and relative performance is actually pretty good. I mean, I think Bitcoin's proven to be somewhat uncorrelated relative to other markets.
Okay, wait a minute. Your haven pick is Bitcoin. I have to push back on this. You have a Bitcoin target. I need to know what it is and why you're not concerned at all from this particular chart, where just last December it was at 19,000 and we're at 6,197 per coin right now.
Yeah. Well, to be clear, you know, it isn't our safe haven trade. Bitcoin is really our alpha trade for our clients. You know, we still recommend 2 or 3 percentage points to be allocated to crypto. But I think the thing to watch, and the reason we think Bitcoin's going to start to act better, is that the 200-day moving average is beginning to flatten. And Bitcoin, by January, is actually going to cross above its 200-day if prices hold here. So, one, I think that the mood of the market's going to improve. But I still think it's possible for Bitcoin to have, you know, an explosive move from here. Its volatility has dropped.
Tom, S&P is down 57. The level right now, 2,727. What is your S&P target?
Well, we think this is a pullback you need to buy. We think the S&P will, you know, seasonally strong fourth quarter. So we see at least 3,025 before the end of the year.
Okay, say that again, 3,000?
3,025.
What's going to get us there?
Well, you have positive seasonals. You know, the move in interest rates is causing funds to de-lever, you know, hedge funds and markets to de-lever. But 3.2% on the 10-year isn't going to hurt the economy. And you have to remember the U.S. is by far one of the few economies with a lot of visibility. So we know investors, as they sort of replace their bets after deleveraging, are going to place it on the U.S.
Transports fell below the key 200-day moving average, though, yesterday. We had the railroads getting smacked down. We had, you know, the airlines not doing well at all. Are the Dow Jones Industrials sort of right there?
You always have to pay attention to the transports because they are very smart and leading indicator groups, and you don't want a Dow theory signal to be generated. But, you know, this to me still looks like a pullback that you need to buy. You know, with VIX rising, people have to delever, but it doesn't mean...
You could be right. February was the last real opportunity, and people are kicking themselves thinking, why didn't I get in then? We had such a nice run-up. What about tech? I hear people saying, tech's over, the FANGs are dead, that's it, we're done.
I think tech's a great long-term story. They've really proven that they can hold on to their dominant position, and the engagement's improved. I think tech's going to be a bigger share of the market overall.
Okay. I want to just quickly talk about the economy and why it appears that it's decoupling from the stock market. We have a strong economy, and I'm going to stand by that at the moment. And it may get even stronger because typically tax cuts kick in 12 to 18 months after they have been put into place. We're not even at 12 months.
Yeah, you're right. The economy's in great shape. I think we've got a pro-administration that's pro-economy, wants not only the economy to do well, but markets to do well. And I think that's going to attract capital from overseas. So, again, I think the U.S. is one of the few places where owning equities is going to make a lot of sense. So
far, this volatility is far from the 10% correction. The VIX right now is off its highs, which would mean that the higher it gets, the more fear is in there. I think we're at about, up about 10%. Just a second ago, we were up 13. So a little bit of tight steam is coming out of this. So what do you think about volatility? How does an investor look at this and say, I know how to play it?
Yeah, well, one, it's always scary because we know the crowd is scared. But the best times and the best entry points you get are when volatility is high, because you know no one's really making a thoughtful decision. They're actually just reacting to markets. And this is the time, if you didn't feel like you own enough stocks, to add to your equity position.
You've had a 25-year-long career. You've been at J.P. Morgan. You've been at Salomon Brothers. What has this past 2 days felt like? Can you compare it to anything in this long career of yours?
Yeah, I mean, I would say that I feel like there's a lot more resilience, and I think one of your other guests mentioned this. I think the individuals are acting like they did in the 90s, that on pullbacks like this, they want to put money to work. And that's a big change for the last decade, where every time we had a sell-off, everybody thought the bull market was over.